Okay, so the next question deals with the issue of fixed property, and more specifically where parties have not agreed whether VAT is included in the purchase price of a property, whether that VAT is then included in that purchase price. And also the next element of that question is, if a transaction is subject to transfer duty, can the acquiring person claim input tax on the basis of the transfer duty paid? Essentially the question said, can they claim back the transfer duty? Now, just as far as whether a property is subject to VAT, if it's a commercial property, in other words, a property that forms part of your enterprise and that property is sold, it's always subject to VAT. There's no way out. If it's a residential property used for residential purposes, it's not part of the enterprise, if you sell it, there's no VAT on it. So if we then get to the point where parties have not agreed whether VAT is included or not, the VAT Act deems the supply to be VAT inclusive. But that is the arrangement between the VAT Act and the supplier. It does not govern the relationship between the supplier and the person that buys the goods. That relationship is governed by the agreement between those two parties. Now, if the agreement is silent on VAT, that the law applies the bystander test. That means if the two parties contracting are standing together and the third party joins them and asks them, would you add VAT on top of the price if VAT was payable? Then they both must say, yes, absolutely. Now, it's unlikely that the buyer will say, yes, absolutely, I'll willingly pay more. We've agreed on a price, that's the end of it. So the courts have always said, therefore, the agreement, the price agreed, would include VAT. So that is how it's applied in practice. It is an issue of what did the parties agree to. So the price charge will include VAT, and VAT must be paid to SARS on the sale. Let's just talk about if the price was not subject to VAT, then it would be a sale not subject to VAT, and you get a notional input tax deduction. The person that acquires that, provided that person acquires that for the purposes of the person's VAT enterprise. So the person will use it in its business, essentially. That person will be entitled to an input tax deduction, but based on the normal principles. So the transfer duty paid and the property and the VAT paid is completely delinked. It's got nothing to do with each other. The notional input tax deduction and the transfer duty paid. Transfer duty paid, that's part of the property transaction, end of story. The input tax deduction that you'll get is 14 over 114 at this stage, which is the tax fraction, multiplied by the price paid for the property. And that's the input tax deduction, provided to the extent that the property has been paid for. In practice, that number will always be much higher than the transfer duty paid in any event. So the reason why it is deductible on that basis isn't because you get a bigger input tax deduction, but it is always useful to consider that ultimately you're better off claiming the tax fraction as opposed to the previous link to the transfer duty. I hope that clarifies some of these issues.